Let's check in on the price of gold. It has rallied, of course, early in 2025. Part of that rally we hear from strategists is uncertainty around the U.S. President Donald Trump's tariff plans. There you see bullion now trading at $2,935 US dollars per ounce, very, very close to an all-time high. For more, joining us from Arden Hills, Minnesota, is Keith Gangl. He's portfolio manager at Gradient Investments. Keith, thanks a lot for joining us. What's your view on the price of gold? Just this morning, Goldman Sachs has bumped up its price target for 2025 to at least $3,100 US dollars per ounce, and says the price could get to $3,300 US dollars per ounce if we get a strained economic outlook and uncertainty from the tariff threats emanating from the White House. What's your take on gold?
Yeah, gold's been very strong. I mean, not too long ago, we were at 2,000. Now we're at 2,900. Gold, we just put that 3,100 number, possibly 3,300. There's a lot of reasons why gold is going up. Certainly the geopolitical risks. We got a new administration with the U.S. The policies are kind of uncertain. Trump's a big fan of using tariffs. So when you use tariffs, that could be inflationary. So I think one of the things that investors are running to is gold. I mean, gold's actually, it's been on the move for a year. So it's not like this new administration is the only reason that gold is moving up. But it also goes hand in hand with Bitcoin's moving up as well. So I think investors are looking for some alternatives besides their traditional stocks and bonds. And I think gold's a good place to be.
What about the U.S. dollar, which has lost some altitude versus the Dixie basket of currencies? We're looking at it right now. So still historically high, still higher to a 52-week high than a 52-week low, but it's come off substantially since the middle portion of January. What's your take on where the U.S. dollar is going and how influential could that be on gold?
Yeah, that's certainly part of it. And obviously with the new administration coming in, people are uncertain about the policies. We still haven't seen a whole lot of action yet. And we saw the spike up going, from November to January, we saw a spike up. And so now the U.S. dollar is just giving a little bit of that back. But still, the U.S. dollar is very, very strong relative to historical standards. So again, a little bit of uncertainty in the markets. At first people are running into the dollar. Now they're shifting those trades more into the gold as we see right now.
Do you hold gold on behalf of clients at Gradient?
Yeah, we have a gold precious metal portfolio which holds gold ETFs within it. So again, we recommend a small allocation. We, generally speaking, anything that's kind of even like that AI stuff, the baskets of cryptocurrency, that's a couple percent. Gold's in that similar vein. We don't recommend more than like a 5% holding in gold, but it's a good alternative. It's a good way of investors putting their eggs in a different basket.
What about silver? Do you hold silver?
No, we don't.
Okay, what's your take on the U.S. economy and the ongoing strength that we tend to see with higher than expected inflation still running in the United States?
Yeah, the U.S. economy is still doing fabulous. I mean, we're growing. Earnings expectation, I think we're about almost 80% through the way of earnings. Earnings been really good. I mean, the average beats for the companies are beating about almost 80% as well. So earnings are good. If you look at the earnings forecast for 2025, expectations are for the S&P 500 to grow almost 15%. That's phenomenal. Historically, they've grown 6 to 7%. So if we can get a growth rate of 15%, we think that can continue to drive the overall market. Markets are not cheap. When you look at the forward valuation, they're trading at about a 22 times PE multiple. So very, fully valued. But again, if EPS can grow that, 14, 15%, we think the market's got a tailwind behind it. Although that being said, the consensus at 14, 15%, we think it actually ends up shaking out more around that 10 to 11%. So again, that's still a very good, healthy number relative to 6 to 7%, which historically has been the normal.
Walmart reports its results early on Thursday morning. It's of course a bellwether and a very successful stock. How important a market event will be that? And I understand that you like shares of Walmart and hold them on behalf of clients.
Yeah, again, we like Walmart. We hold it for our shareholders as well. It's a great company. They've been, it's been a phenomenal stock. If you pull it up here on the chart, done very, very well. The one knock on it is not cheap. It trades at about a 37 times forward PE multiple, so it's getting high. But again, now we're growing a steady Eddie kind of company, growing double-digit EPS growth, which is phenomenal. They've actually accelerated over the last year and a half, and that's why the stock's done so well. Now we have an earnings report later on this week. That's going to be a key thing to watch, not only for just Walmart stock, but the consumer in general, right? Consumer has been very healthy, kind of hanging in there right now. but there are signs that the consumer may be weakening. So we'll hear a little bit more from Walmart here shortly to see how the consumer is actually doing.
Keith, thanks a lot for this conversation. He's portfolio manager at Gradient Investments, joining us from